Well, good morning once again. I'm Marlon Bowling with you on a Monday, and this morning USDA said we sold some soybeans over the weekend, and I wanted to share that with you before we take a first look at our prices here on the activity. We sold 192,000 tons of soybeans to unknown destinations once again, and of course this was over the weekend, so we'll add that to the amount that we had late last week when it was also unknown destinations. So is that helping the market or not? You be the judge. Let's take a look at corn here first, and with our quotes provided by Bar Chart, my goodness. The bottom is falling out here. March corn down 12 1/4 at $6.64 per bushel, almost on the low of the day. We had a high last night of $6.74 3/4, and we're almost 11 cents off of that right now. On the December new crop corn, we're 11 1/4 lower now. We're at $5.84 1/2 per bushel. Let's switch over to the soybean trade. On soybeans, we have the nearby March. Wow, down 26 3/4 cents. 14.79 3/4 is the last trade, and that is on the low of the day. My goodness, we have May down 25 cents. Let's take a look at November new crop soybeans. We have them down 18 3/4. 13.33 1/4 is the last trade there. Just big losses taking place in the soybean trade today. Wheat started out weaker, and now they are going down for the count. What in the world? We have March Chicago wheat down 22 1/2 cents at $7.19 per bushel after a high last night of $7.40 1/2. Wow. July down 20 1/2 cents right now. Kansas City, you have the March down 26 1/2 cents. We're at 8.21 1/2, and July new crop down 24 at 8.11 1/2. Well, what about Minneapolis wheat? Can it escape? No. We have March down 16 1/4. We're at 8.96 1/4. We're under $9. And July down 10 3/4 at 8.88 1/4. I have Dewey Strickler on the line. He's with AgWatch Market Advisors, and he's in Franklin, Kentucky. All right, Dewey, I suppose you're going to say that the Elliott wave analysis was pointing to a washout in the grain markets. Is it about that time or what?
It's about that time. What we've got here now, I told customers last week that, of course, since last month, everyone has been looking at weather in Argentina, and I told clients last week we're about ready to wear the welcome mat out, and of course they had some showers over the weekend. So when you look at the patterns, they were very toppy, and this just comes to show that we're going to be looking at some lower values, and it brings into, I think, focus here. No one really mentioned it back when we had our crop report, but when you look at global demand was actually down for both corn and soybeans as far as global usage is concerned. And even though that you had Argentina's crops that were lowered here production, they're still higher than they were last year. So I think now we're starting to see this come into reality.
Well, you know, we were looking at some price tables and charts from like a couple of years ago. And if I recall, we had market prices that were, a couple of bucks under where they are now. And really, it seemed like the S&D tables were not that much different than what they are now.
That's true. Yeah, I put out earlier this month a long-range forecast, and these grains run in about 5.5-year cycles, and we've already completed the top end of the cycles. So for the next couple of years or so, we're going to be looking at some declining lower values and period of consolidation to develop.
Okay, well, a very weak start here on the grains. Now we'll take a quick break here, Dewey, and then we'll talk about the open on livestock. Remember, we had that cattle on feed report that came out Friday. We'll see if it has any impact on the open this morning when we come back. We're back with Dewey Strickler. Now we're going to switch our attention over to the livestock trade. Dewey, we had the cattle on feed numbers that came out after the close on Friday, and they had no surprises whatsoever, right in line with expectations. On feed came in at 97%, real close to what the trade was looking for. Same story on placements, 92%, maybe just a touch heavier than what the trade was guessing on average. Marketing's at 94%, just a shade under the average trade guess, but let's look at how we're opening with the weakness in the feed grains this morning. Let's go to live cattle on our quotes provided by Bar Chart. we have the April live cattle 97 cents higher at 160.90. Now, it took them a little while to get some momentum, but they are going higher now. June is up 80. We're at 157.37. They actually, I believe, were just a touch lower right at the open this morning. The leader by far this morning is the feeder cattle market, and we have the March contract now $2.55 higher. We're at 183.52. April now up 2.27 at 188.05, within about 12 cents of our high of the day. And on lean hogs, now we had some pressure early on, but now that's gone. They have flipped around to the plus side, and you have April lean hogs now 60 higher at 86.32. That's already $1.30 off of our earlier low and just one tick from our high of the day. So, Dewey, the feeder cattle really taking advantage here of the cattle on feed numbers and the lower corn market this morning. Were they due for a bounce too?
They were due for a bounce. I think they're taking more advantage of the decline that we're looking in the corn market right now. Of course, that has spilled over into the fat cattle, and maybe to some extent it's given a little bit of support to the hogs. But I think the issues that the meats are going to be looking at, and that is what the general state of the economy is, and which is not real great right now. I would say that as far as commodities, and this includes the grains and meats, I think you want to keep your eye on the Dow Jones here. It starts falling below, let's say, the December lows here. You could see things get a little bit bloody here, quite a bit bloody, and that could spill over to commodities, meats, and grains.
Right now, the Dow is sitting 80 points higher is all, 33,554. So it's a fairly quiet start to the day there. On the U.S. dollar index, 200 points higher. The March futures now at 101.985. So it's under 102, but just barely right now. Dewey, great information. Thank you for joining us here this morning. We'll talk again next week. Dewey Strickler of AgWatch Market Advisors. Tammy, that's a look at how we're opening up. It may be totally different next half hour. We'll stay on top of it for you.